but looks like it's all working now. You will see on the top left-hand side, you have a QR code that you can scan, and this will allow you to join the chat room. So I will have the chat room open separately. I'll be able to see any questions that you guys have if you are with me live watching. If you are watching on the recorded version, so you're watching the recording, then the questions that you have, they are best directed, let me bring this up, best directed to this link here. So that is tradewithufos.com/Becky. So let me take that off and we should see. Okay, so tradewithufos.com/Becky. If you go here, you will see that there's a question and answer section, kind of like a blog post almost that people might put. It's Q&A. So what you can do is type in a question. So let's say, for example, you might have a question about UFOs and you click search. I think my internet is being weird today. Hopefully we have a nice smooth stream. It might be that I'm delayed a little bit, but as long as you can hear me fine, that's good. So you'll see if you've got questions about UFOs, you might type that in and there's loads of different answers depending on what your question is. If you do not find the answer to your question, then you can post another question. So again, so that's tradewithufos.com/Becky, and you can use the Q&A section here for any questions. If you scroll down, you can see, depending on which platforms you're using and which technology you want to use, how much that might cost you or if it's free. About the Predictive Options Planner, which you'll see me use today. Not actually the options side of it, but the platform itself I'll be using today. And if you scroll to the top, then you've got apps and courses and other coaching you can look at there. Okay, so let's dive straight in. What I wanted to do is look at some of the trades that we had on last time so that we can see how one might manage these trades. Yes, it's important, I know, to be able to put trades on and see what's available right now in the markets, especially those of you that are watching live. However, if you don't know how to manage those trades and you end up losing when you don't need to lose or missing out on profits when you could have taken a profit, that's frustrating. So there's another element to it, which is understanding how to manage these trades. So just want to look at one or two trades that we placed last time so that you can see that. Okay, so let's give ourselves a little bit more room. Again, on the top left, you've got the QR code. Scan that. You can download the app, which is Speak Up, and you'll see the chat room key in there, which I think, my eyes aren't working very well today. I think it's 23. I can't actually see it. 20311. Anyway, you'll see it on the screen and you'll be able to ask me questions live if you're with me live. That also means saying to me, can you look at this market? Can you look at this time frame? What do you think of this trade? We can be as specific as you want it to be. Okay, so we placed a Bitcoin trade last time. We placed it, this is why we put the little note, on the 12th of September. So that was back when the candles looked like this. So this is where we can use the replay function as well to help. So on the 12th of September, it looked like this. On the left-hand side, focusing just on the left, we had a thick red dot. Price was down, or probability was down. We also had the EMA just outside of where we wanted it to be. As it were to come up, we had a couple of UFOs on top of each other, and we placed that trade here. Now, if we look on the right, we'll see that this trade actually triggered on the 18th of September. So what we're going to do is fast forward on the right-hand side to get to the 18th of September, which would be this candle here. Now, as we can see, on the 18th of September, we had a thin red dot. The fact that it's thin instead of thick, as we can see next to it, the fact that it's thin tells us that it is no longer, price is no longer confirmed to the downside. So all that means is we lose a big chunk of our probability. Therefore, if we'd have looked at this on the morning of the 18th, we would have cancelled the trade before it triggered, before we got in. Meaning we wouldn't have captured any profit if there was any. We'll confirm that in a second. But nor would we have lost anything. So we would have just been out of the trade using the auto climate, which is the first thing we look at to even get into a trade in the first place, using the auto climate to tell us if anything's changed and therefore if we should cancel the trade. In this case, auto climate changed. We should have cancelled the trade before it triggered Monday morning. Now, let's say you're a set it and forget it trader. You accept that things might change. You take it, I'll put it in as long as everything's right as I put it in. I'm going to leave it and I'll check it in a month. Right? You might be really, really hands off. That will mean that you probably take more stop outs than you would otherwise need to. But hey, still overall, you're profiting and you lose a couple of extra trades here or there when you didn't need to. Fine. Might also mean that you end up profiting when you might not have either. Either way is fine. It's about what's most comfortable for you and what your statistics, what your back testing tells you works better or not. Okay, so we can see by the looks of it, so the first target was 25,992.74. So if we just spread this out, it'll be easier to tell. So as we can see here, we had this candle that I'm highlighting here. Let me just spread that out. Brilliant. This candle here, this green candle, the low was 25,983.78, meaning if you'd have left the trade, not cancelled it, even though we should have, if you'd have left the trade until now, you would have hit your first target. But then, as we see, price then came back against us and stopped us out here on the 2nd of October, meaning you'd have made half the trade, then lost half of the trade, break even, or you would have cancelled it before it happened and you wouldn't have made or lost anything either. So whether you managed this trade or you didn't, you had the same result. In fact, if you left it, you might have paid a little bit in commissions or spread, right? But overall, more or less, nothing happened with this trade. Now, let's say price just stormed through here and it didn't hit the first target. If you'd have been managing it more vigilantly, you would have got out before that happened, saving yourself a loss. Let's say price hit the entry and actually went straight down and hit our final target. Then if you'd have been managing it, you would have got out of the trade before it triggered. You'd have missed the potential profit. Pros and cons either way. Most important thing is that as a trader, you need to decide what would you rather avoid. Does it hurt you more to lose when you shouldn't have? Or does it hurt you more to miss out on profits? Unfortunately, there's probably not an in-between there where you can avoid both of those things. If you'd rather save money, save losses, then you need to be more vigilant. You need to check in more regularly to allow the change of situation to get you out of trades before they trigger or some way into that trade. If you are more hurt by watching potential profits run in what would have been your favor and you're not part of that, and you'd rather risk taking an extra loss to do that, then you don't need to be as vigilant. Again, neither way is right or wrong, but you'll know which one hurts you more. Try it with a small account if you're not sure and see what happens. Okay, let's now look at new trades. And since we are looking at Bitcoin, let's do Bitcoin now. By the way, when I look at cryptos, I nearly always look at Bitcoin just because it's obviously one of the more popular ones. I tend to look at bigger timeframes. If you would rather I look at other timeframes or other markets, let me know. You can email me if you'd like to tell me that if you're watching recorded, or you can, if you're with me live, like we said, use the QR code and send me a chat message. Okay, so let's have a look at Bitcoin right now. So one of the issues immediately that we see here is we have a red UFO on top and we are within a green UFO at the moment. So we have probability up, thick blue dot, and we are within a lot of buyers at the moment, within the buy UFO. So it's kind of 2 ticks towards buying. But the sell UFO is quite close, which might mean we don't have very far to take this, but it will depend on the opportunities we see. So let's take a look. I'm going to go through it a little bit quicker than I might usually, just to be able to get on a few trades, because we spent a little bit more time looking at past trades today. So if it's not making sense, again, feel free to ask questions. Feel free to reach out on the tradewithufos.com/Becky, or feel free to email me if you want to do that as well. Alrighty, so we've got our EMA at 27,341. We have no UFOs on this time frame there, but I'm going to look at different time frames. If you want more context as to why I do that or what time frames I might use, previous sessions might help with that. Okay. Alrighty, so we have no green UFOs on the right-hand side that coincide with EMA. So we'll move on and we'll look at a different cryptocurrency. So I'm going to look at coin market cap. And I'm going to sort it by volume. I tend not to look at Tether just because it's basically the US dollar against the US dollar. It doesn't move much. So we're going to look at Bitcoin. We've already done that. Let's have a look at Ethereum at the moment. I always look at Coinbase as well, by the way, but again, you guys would be using markets that you, or sorry, the platforms that you trade with. Okay, we obviously had a trade on from a while ago. Let's delete that. Alrighty, so probability down. We're looking for a sell opportunity. We've got a little way to go before we hit our buyers down here. So this is also positive for us. Our EMA is at, there you go, you can see it there, 16.90. Alrighty, so at that blue line, we are looking for red UFOs. So at the moment, on this smaller time frame, we can't see any. So let's go to a bigger time frame. Here again. Nothing there. Okay, I'm going to go one more up. I'm going to look at a 240. Okay, nothing in there. If we don't have a red UFO that aligns with the EMA, we don't take the trade. It's sometimes annoying because you want to just place a trade, but trust me, it's much better to eliminate trades than it is to take them. We want to make sure that we are getting into trades that have decent probabilities for us. All right, let's look at XRP. Okay, straight away, we've got an unconfirmed climate. We've got this, I'll make this a little bit bigger. Got this thin red dot. If it's unconfirmed, means we have no probabilities either way, or no confirmed probabilities either way. So we move on from that. Let's look at BNB. Okay, I can't see that on Coinbase. Let's use FXCM. Okay. Again, if you're using Binance or Crypto.com or whatever platforms you're using, absolutely fine. Make sure that you look at that platform's data. We don't want to be looking at one platform's data that's got slightly different prices and placing trades on another platform that's got other prices. It wouldn't be very helpful. Okay, so I've put the EMA where we want it to be. We want a red UFO coinciding with that on a smaller time frame. So let's have a look. Okay, nothing there so far. Okay, looks like just inside it on an hourly chart. So on an hourly chart, we've got this area here, which is a red UFO at the top of other red UFOs. And we can see here that it ends just as the EMA, or just past the EMA. The issue with that is that as price moves up, so too will the EMA. So as price comes towards us, the EMA is going to move up, which means it no longer coincides. So we don't want that. Put that back roughly where it was. Let's see if we have a slightly different situation on the 55. We do. On the 55, we have a wider area, so that's the one we're going to take. Brilliant. Okay, so let's delete that now, and this will be our first trade of the day. In terms of our room for profit, quite a lot. I'll be honest, unlikely the price is going to go all the way down there and that we get all of that profit. We will use this as our second target, but we're obviously going to put our first target much closer, 1 to 1 away. And then there are different ways to manage the trade to lock in profit if it does continue down. Let's firstly be very clear on, let's have a few trades maybe already on, but okay, let's put this here. So that general area is between, I think it's 2, so it'll be this low, wouldn't it? 213.84, okay. So 213.84 to 213.5, oh sorry, 217.53. 217.53. Okay, so that's our area. Now we need to add a little bit of room for the wiggle spread as well. So what we're going to do is we're going to make this zone 20% bigger. So let's get a calculator out to do this. So we've got 217.53 minus 213.84 gives us 3.69, so $3.69. We're going to times that by 1.2, so that's 4.428. We're going to add that to the entry, which gives us 218.268, and I'm going to round that up. So it was 218, so we're going to put 218.27. Okay, 218.27. So we've added 20% wiggle room. A lot more than you would in other currencies, by the way, in spot forex, normal forex fiat currencies. You wouldn't give it 20% necessarily, can if you want to, but we are giving it more on cryptos because of the extra volatility that we typically experience in the crypto market. Okay, so that's our entry, that's our stop. The red line is our stop, the black line is our entry. You'll see if I then spread this out on the left-hand side, that our EMA is nicely snug between our entry and stop. Price comes towards us, even if the EMA moves up a little bit, unlikely to move all the way out of that area. So now we need to put in our, there we go, targets. So we're going to go sell 213.84. Stop loss, as we know, 218.27. That's 4.43 in the end, so we round it up. We are making sure that whatever we are risking is what we are looking to gain when it comes to our first target. It's always 1 to 1. So we use the platform to do the maths for us. That takes us to 209.41 as our safety target. I'm going to risk $50. And you guys choose what you want to risk. And I'm going to put time in force 1 month. First half of the trade is in. Second half of the trade, our final target is going to be all the way down here. So we've got 43.353527. I'm going to round that up to 43.36. Okay, so it was 213.84. Stop loss is the same, risk is the same. Profit target in this case, 43.36. You'll notice that's a 38 to 1. Again, unlikely that that's going to happen. It would be great if it did. But if it doesn't get all the way down here, then what we'll do is as price moves in our favor, if price moves in our favor, so let's assume price moves up, triggers us into our sell, our short here, starts to move down, new red UFOs are formed. So new of these guys are formed on this same time frame. We're going to take our stop and we're going to move it behind the new red UFOs that form. And or if the climate changes at all to anything other than confirmed down, then we will cancel the trade. Get out of the trade, whatever it's doing, whether it's a slight loss or a slight profit, break even, whatever's happening. If we no longer have probability down, we no longer want to be in a short position. Okay, so what I'm going to do is just bring up a sticky note here so that it's nice and clear what we're doing and easy for you guys to take a reference. Okay, so we were looking at the Binance coin. So BNB, I believe is the ticker symbol, USD. I don't think so. We're going short, entry, 213.84. Stop loss, 218.27. Safety target, 209.41. And final target, 43.36. Risk per coin. So we saw that was $3.96, I believe it was, but it's whatever that distance is. That was the original, so we've just got to add that separately. So it's going to be 218.27 minus 213.84, 443. So if you were to go short with one Binance coin, then you would be risking between our entry and stop $4.43. Now, of course, you can have multiple coins. So if you're risking 10 coins, then it would be $44.30. But you can, in cryptos, it's one of the beauties of it, risk 0.000001 of a coin, right? And be risking a fraction of a cent. Now, usually most people are going to be somewhere around there. So if you're risking one coin, it's 4.43. We used a 1 week and a 55 minute. So that is up there now for you guys to take a snapshot, for you to see where all the numbers are, what we're doing. And I will leave that up there for just a second. Oh, bring it back up. Where'd it go? There you go. Leave that up there for just a second for you guys to take a snapshot. So 3, 2, 1. Brilliant. Now we're going to put a little note. It's going to be really easy to follow next time. So placed on the 10th of October, 1 week, 55 minutes. Okay, so that's cryptos. Let's now move on now to stocks. So for stocks, I'm going to look at the predictive options planner. We have the ES, so the futures, continuous futures contract for the S&P 500, which is the top 500 US stocks. At the moment, has a thick red dot, probability down. It is overextended to the downside. Usually price would go down for 3 candles, and we're on the 5th. So it means it's gone further than what would be normal, but we still have probability here to the downside. So that means to start with, I'm going to look for individual stocks that also have probability down. So to do that, we're going to bring up our matrix, and I'm going to add some filters here. So same filters we always use on all of the sessions. You'll see them in previous examples. Again, I'm going to go for the bigger time frames. For me, I prefer to do things more passively rather than day trading, although all you would do to change, or all you would do differently if you're day trading, is just change the interval to a smaller interval, right? Look at what is happening on the daily chart so that you can execute on a 20-minute chart. So you're probably in and out within the day. Or you might, if you're trading other things, or even on stocks, look at what the auto climate is doing on a 60-minute chart so that you can execute on an 8-minute chart. So you're doing the same thing, the exact same process. All that changes is the interval. I just prefer to look at bigger timeframes myself. So I'm just following that because that's what I do. So confirm down, sensible, near the 9 EMA. That's what we're looking for. And we're going to exclude stocks that have earnings in the next 5 days. Let me just see if I've got any other things checked. Water climate, confirm down. It's too hopeful. because for some reason this is coming up blank, and I don't believe that it's blank. Last time this happened, it just needed to filter again. So let's, all US stocks, let me check on the right thing. Yeah, all stock symbols, all US exchanges, all US stocks, stocks and ETFs, excluding earnings that come out in the next 5 days. So something that might affect us soon. And weekly confirmed down. Okay. I'm surprised that that's happening. Let's try confirmed up and just see what happens there. Okay, there must be something happening with the scanner, or I've maybe clicked the wrong thing. That's probably more likely. Let's try one more time. I'm going to try this. Okay, well, if it doesn't work, let's uncheck that, see if that works better. Let's uncheck that. Yeah, okay, so I've unchecked everything that's kind of filtering it down and it's not coming back. So it might be my internet, might be something that's a problem there. In which case, what we'll do is we're going to add back in those two. I'm going to ask it to scan again. We'll come back to it. Thank you. And there you go. Brilliant. We have a result. So confirmed down sensible near the 9 EMA. We now have our list. Brilliant. I think it was probably my internet was just slow to retrieve that information, but let's crack on now that we have it. Okay, so just a reminder, and I know the chat room key is up in the top left-hand side. For those of you that might be joining live and you don't know what that is, scan that QR code, put in the chat room key. As you get the Speak Up app, you'll be able to ask me questions live if you're here with me live. Direct me to what markets or timeframes you want me to look at. If you're watching recorded, then you would go to this link here, tradewithufos.com/Becky, in order to ask a question. Or let me know if you'd like me to look at different things in future sessions. Alrighty, come back to this. So we're going to filter. And we're going to start, just go top to bottom until we find example. Ooh. Okay, so we are towards the end. In fact, I tell you what, let's, now that our scanner is working, we've got quite a long list. Let's be early on the move down. Okay, slightly shorter list. In theory, being early on the way down or early into a confirmed movement down gives us more room to take a profit. So that's what we'll look at now. Okay, so our EMA is at 5.49. Let's just draw this on real quick. 5.49. Great, so that's our EMA. We want a red UFO around that area. We're going to look through a few different time frames to find it. Brilliant, there we go. 144 minute. First trade we look at, we have an opportunity. So that's what we're going to take. Okay, so what I'm going to do, I'm going to bring up a stock sticky note, and then we're going to go back to TradingView in order to place the trade. For me, I just find TradingView much, much easier. It helps me do maths, makes it be a lot easier to place a trade. And of course, you can link TradingView, which is a platform, to many different brokers. So you can link to TradeStation or others that allow you to actually place the trade. But I prefer to do it via TradingView. Okay, so our ticker symbol is ACCO. Earnings, let's have a look at when the earnings would be. We're going to go to this. Let's go to stocks. ACCO. We already know that earnings are more than 5 days away, but let's be aware of when the next one is. Earnings will come out on the 31st of October. So again, useful to know. Halloween, hopefully it's not a scary answer. So useful to know because earnings for any given stock is likely to increase some volatility. If we are already in the trade and we're quite far towards our profit, maybe we just want to take a little bit of profit to protect ourselves. Maybe we want to move our stop closer down. Maybe we want to get out entirely. Depends on how risk averse you are or not. If we're not in the trade yet and it's hovering by the entry, or we are in the trade and it's hovering by the entry or close to the stop, I'd say we just want to get out of that because the volatility may well move around a little bit and stop us out. But if we're far into profit, less likely that volatility is going to make price go all the way back up here. But if price is already here, volatility may well cause a small stop out. That would be what I would suggest. But again, it depends on how risk averse you are or risk tolerant you are. Alrighty, so let's come back to top here and bring this back up. Right, so our entry is going to be 5.48. The stop loss is 5.52 plus 10 cents, 5.62. We'll figure out our safety target in a second. Our final target will be our closest green UFO. We don't have one, which means we're having a trailing stop on our final target, meaning that every time a new red UFO forms, we will just take our stop and have it follow. Risk per share we'll figure out in a second. We're 1 week and 144 minutes. Okay, we'll bring this up in a sec, but let's get this done. So we are going short. Let's just put that on the hand side as well. Short at 5.48. Just going to move that over here for a sec. So I've got it in my eye. 5.48, so very nearly in. Stop loss is 5.62. Our risk, I'll always make it $50. Again, you guys choose what you want. And our safety target is going to be 5.34. We'll change that in a sec. Okay, I'll put the time in force for a month. And there we go. First half. Second half, so same entry, which is 4.8. Same stop loss, which is 6.2. Same risk, but we just don't check take profit. And that's how we put that in. I'm going to draw it on so it's nice and easy to see next time. 4.8 and 6.2. $5.34 is the safety target. Let's put a little note. So placed 10th October, 1 week, 144 minute, target 2, trailing. Great, so that's that trade put on. Let's now just update that quickly on the sticky note. So it was 5.34. The risk here per stock was 14 cents. Okay, so if you were to trade one share of this, you'd be risking 14 cents per share. Of course, you might risk 10 shares, 100 shares, 1,000 shares, 2 shares, 3 shares, whatever you want. Try to make it no more than 2% of your total trading account. And 2% would actually be risking quite a lot because then you only have to lose a handful of trades in a row and you might have lost 10, 15, 20% of your account. If you risk 0.5% of your account per trade, it's going to take quite a few trades going wrong before you lose considerable amounts of capital. Okay, so we've done a crypto trade. We've done a stock trade. We're now going to look at forex, spot forex, and we are going to go to a slightly smaller time frame. What we're going to do here is we're just going to cycle through, but what we're going to do to help us to tailor it down a little bit, let's save that, is we're going to use the FX Street calendar. So I've filtered here by the main currencies that we trade and ones that obviously influence it, and high impact results. So this tells us that today, this should have already happened. New York time? Yeah, should have already happened. We may have had some news that might affect the euro. Tomorrow, we have news that might affect the euro and the US dollar. We also have news on Thursday that might affect the US dollar, as well as on Friday, and the euro again, and then maybe a little bit on the pound. So between now and the end of the week, today being Tuesday, between now and the end of the week, the euro has popped up a couple of times. The dollar has popped up quite a lot. We may well see volatility on those currencies. So I go through this every time. I'll do this very quick now for those of you that are new. If you are the extreme of conservative in terms of your risk tolerance, so you are very risk averse, then you would say, I will not trade the euro, I will not trade the dollar, I will definitely not trade the euro dollar until I have at least a couple of days where I'm unlikely to see volatility. And then you check every day anyway, you manage it. If you're the other extreme of risk tolerance, you'd go, man, I don't care. I'll place trades on the euro dollar. I'll place trades on the dollar yen. I'll place trades on the euro pound, whatever. I don't care about the volatility because at least I might be able to take some profits. Fine. Somewhere in the middle is that you might say, I'm going to avoid the euro dollar, but I might trade other dollar pairs or other euro pairs, but I won't do more than one. So for example, if I do euro Canadian, I won't then also place euro yen or euro pound or euro Swiss, because then you're doubling up on the euro. You could say, I'll place as many opportunities as I find, but I'm going to make sure that I risk half of my typical risk if I trade either the euro or the dollar. So you see how there's a spectrum of choice available to you there, depending on how risk averse or risk tolerant you are. The more risk averse you are, then you are less likely to get stopped out because volatility will often increase stop outs, but you're also less likely to take profits because you're not going to be in any trades. The more risk tolerant you are, the more trades you're likely to be in. So you increase your chances of being in profit, but you also increase your chances of losing. So neither's right or wrong. It's what suits you best so that you can consistently execute that. Alrighty, let's go and have a look. I'm going to avoid the euro dollar. So let's start with, we'll look at some majors and go from there. Where am I? Okay. So let's look at let's avoid the pound dollar as well, because that came up. So let's do dollar Canadian. I always look at Oanda. Again, it doesn't need to be, it can be anything. Okay, so we want a daily, actually, on the left. So we're looking at different time frames. Yeah, 55 to start with on the right. So on a daily chart, you'll see we actually have an unconfirmed climate. Price doesn't know what it's doing on a daily time frame. So if you're trading on these time frames, which we will for the purposes of this example, we're doing swing trading here. But the other examples we've done so far might be longer term swing to shorter term position trading. If we're swing trading spot forex, if we're looking at a daily chart on the left, then we don't have opportunity on the US dollar. But US yen. Probability down here for the US yen, although it looks like price has crossed the EMA, so we don't want to have anything to do with that. It's likely to turn unconfirmed, basically. Dollar Swiss, also unconfirmed. Kind of makes sense. We're looking at correlated markets. Let's now look at Aussie dollar. Okay, with the Australian versus the US dollar, we have, it looks like we had a trade from ages ago. Let's remove that. Probability upwards. And we have a long way to go before we hit some sellers, also close to the EMA. So hopefully with the Aussie dollar will be where we find another trade. So we have our EMA at 0.6386. There you go, roughly. Brilliant. I've drawn that to the right level. So let me just spread this out a little bit. That's where our EMA is. We're looking for a green UFO here. So let's look through different timeframes to find. Oh, let's go back there. Brilliant. 60 minutes. Perfectly aligned. So we'll take the 60-minute one. I'd rather take slightly bigger. What would be the word? A slightly bigger risk there, a slightly bigger time frame. So here we go. We may well skip into this bottom one, but let's see. So 0.63862, round up to 87 plus 2 for our spread. That's our entry. Our stop loss is 0.6373, and we're going to minus 5 to get us there. Lovely. So you'll notice that has meant that our stop loss has fallen into a new UFO, which means we need to take this UFO into account. This is going to happen again on the next one. So looks like we're going to have to combine all of these. Pros and cons to it, I will explain what they are. So 0.6312 minus 5. So pros and cons. The con is it's now a wider zone. So it's now 82 pips in difference, which means it has to go at least 82 pips in our favor for us just to break even. Which means if we want it to, if it goes to 90 or 100 before it comes back against us and we take profit there, we're making less in terms of the ratio. The smaller the zone, the more likely you are to get stopped out because the less wiggle room you have. But it doesn't need to go as far in our favor for us to take a profit. The ratio is more in our favor the further it goes. Again, pros and cons of each. The wider zone, that's why I said I'd prefer to take a bigger time frame. Bigger time frames usually means a wider zone, a bigger UFO. What that means is that we have a little bit more wiggle room. We are less likely to be stopped out. But as I said, it will also mean it has to go further for us to take a profit. But we will be willing to take that risk today. Okay, 0.6389 is our entry. Stop loss is 0.6307. Risk, $50, so as close to that as we can. Our profit, if we're risking 82 pips, we are making 82 pips. So that takes us to 0.64. Lovely. So that's our first target, our safety target. Time in force, again, I'm going to leave it at a month. Let's put that in. Our second target is going to be the furthest red UFO we can find, so the closest stack of sellers. And of course, we want to get out of a trade if we have sellers in the way. If we're buying and we want price to go up, we want to get out of the way of any sellers. So we're going to get out just before that. They start at 0.6921. Actually start at 0.69216. I'm just going to round it down to 2-1. That's a 6-1. Now, obviously, bear in mind, if our stop loss, and I'll just show you this, if our stop loss was tighter, so let's say at, was it 770, say, then it going the same distance in pips would be a 28-1, but we're just more likely to get stopped out. So that's why we put all those UFOs together. The reason we put it together, by the way, is that if there are buyers just below us and we can see them, and we get out amongst those buyers, then we're selling whilst there's lots of buying going on, which means we're probably selling it cheap. We want to make sure that if there's lots of buying going on, that we're still part of that, because that's going to push price up. So that's why we want to make sure that our stop loss always falls in the white space, the space outside of where, in this case, buyers are. Because that way, if price goes through all of those buyers, those 3 stacks of buyers in a row, probably there weren't enough buyers. Probably there's a lot more selling pressure, in which case, get me out. But if I get out somewhere in here, when I've got buyers still there, then price might stop me out and then turn. because the buyers are there to kind of scoop that up. So that's why we want to make sure we do it this way and put all of those together. So it's 0.6389 to 0.6307. Okay. So let's put this in as well. 0.6921. All right. So that is our forex trade of the day. Let's just put little notes on here. So placed 10th of October, 1 day, 1 hour. And let's just bring up a sticky note for you guys so that it's easy to maybe take a snapshot or get all the numbers all together if you can't see them on the chart. We're ready. So it was Aussie US dollar long in this case. Entry at 0.6389. Stop loss. Ooh. There you go. At 0.6307. Safety target 0.6471. Final target at 0.6921. The risk per micro lot, let's have a look here. So if we went in at 8.9 there, the reasonable kind of risk there is $8.20. Oh yeah, because 82 pips, that makes sense. $8.20 per micro lot. What that would be. And we are on the 1 day, 1 hour. Alrighty, so let's now bring up the others. So we had stock trade that we put on, and we had a crypto trade, although I can't bring that up for some reason. Okay, for some reason it's frozen, so it's not bringing up the crypto one, but we put on 3 trades today. First one was BNB USD. That was a short. Then we put on a stock trade. For stocks, we used the options trading we used the Predictive Options Planner platform in order to have a look for the opportunity, scan for the opportunity. Then we place the trade on TradingView. We have the earnings. We know we're going short, our entry stop, different targets, our risk per share, and what timeframes we used. Then we placed a forex trade. We used slightly different timeframes. So over a shorter amount of time, this trade should happen. It's the Aussie dollar versus the US dollar going long in this instance. We know our entry, stop, and targets, and our risk per micro lot. So we have placed trades on different markets in different timeframes. You'll notice that the application is exactly the same. We are looking at the auto climate. Do we have probability up, down, or nowhere? If it's up, then where do we have the best probability of getting in? That's the EMA. Do we have buyers at that area? If it's down, where's the EMA? Do we have sellers at that area? If so, then we look at that area and we place the trade. Do we have room to take it to a final target? If so, great, we put that in. If we don't have the room, we don't put the trade on. If we don't have a final target available, we put a trailing stop. So for those of you that have taken part in our courses, you'll know and you'll see the flow chart that we use. Basically, does it tick this or this? Yes, great, next step. No, don't take the trade. Next step, does it do this or this? Yes, great, next step. No, don't take the trade. It's very methodical. We're not doing it based on gut feel or what we've heard in the news or what we think will happen or what our friends are doing. It's based on the statistical probabilities that these things will happen or they won't. And again, you've got a spectrum within that to be stricter or not. Neither way is right or wrong. If you have data to show that you make more money one way or the other, great, do that as long as you're comfortable to do it. If you're uncomfortable doing one or the other, then don't do that because psychologically you're less likely to consistently execute it. Either way, you're still following a methodology this or this, this or this. And then you've got that little bit of wiggle room in there to be able to apply this in a way that suits you as a trader and as an individual best. If you have questions, again, as a reminder, go to tradewithufos.com/Becky. It's now on the screen. And from there, if I come back here, move this that way. You can look at apps and courses and coaching from there. You can look at our schedules and log in if you're already part of anything. You can book time with me if you'd like to. But this area here, this Q&A, this is going to be where you get a lot of questions answered. So again, it might be, for example, that you put in stop loss and search. And this is where other people may have had a question around stop losses. So you have questions. What is a breakout in trading? What is support and resistance level? What is a trailing stop order? What is a stop loss order? This is about options, condor strategy. How to make profits from buying low and selling high. So wherever stop loss is mentioned, you're going to see that. You might go, no, that's not the question I had. In which case, no problem. You can just post your own question and then we will answer it. If you want to get in touch with me directly, then my email address, let me see if I can write on screen. I'm not sure I can. So it's Becky@tradewithufos.com. Basically, that's the email address, Becky, BECKY, @tradewithufos.com. And then you'll be able to get in touch with me directly. Again, you might say, for your next session, Becky, it would be great if you could look at these markets or these timeframes, or could you explain this thing? Whatever it is, I'm around to help. For today, we will wrap up. Hopefully that was helpful. Again, let me know if you'd like to see anything different in future sessions. Otherwise, have a great week trading. Be safe. Enjoy. See you soon. Bye-bye.